Every forex trader at some point have experienced this scenario. You get in on a trade, price stops you out, and then immediately after stopping you out, it goes in your intended direction. In other words, you got your analysis right, but then got your entry all wrong. I'm sure you would agree with me that if this scenario continues to repeat itself, it has a way of messing up your confidence. Now, pay close attention, because in the course of this video, I would show you some live chart examples on how you could improve your entries, and I just might be able to also help you regain your confidence. Over time, I have found out that a lot of beginner traders do not majorly suffer from lack of information. In fact, one could say that a lot of traders suffer from what some would call information overload. Now, what this simply means is the accumulation of excess information without actually knowing how to fit them all together. The subject of information overload will be for another video, but before I continue, make sure to subscribe. Also like and share if you're finding this video helpful so that it can reach more people like you. Thanks for doing just that. Now let's get back to it. So, the main problem that these traders have is their inability to combine all the different resources or information they have been able to gather over time in such a way that they feed into one another, allowing them to be able to now execute a good trade with amazing entries. You see, it is very easy to get on YouTube and watch different videos on strategies, but to be able to apply those informations on a live chart is another thing entirely, and this is where they fail. If I am to ask you a question, how many strategies have you learned within the past 1 month, and have you actually become profitable? What would be your answer? Now I'm sure you are getting the drift. Anyway, let us know in the comment section what your answers are. Now, take for instance, you learned about engulfing candles, heads and shoulders pattern, W and M pattern, Fibonacci, RSI indicator, trend lines and dynamic trend lines, ICT, SMC, support and resistance, hanging man, 3 white soldiers and black crow, etc., etc. The question now would be, how then do you combine all of these information in such a way that you are now able to execute good trades? These are the 2 things I recommend you do. Number 1, zones. Whenever you get on the chart looking for a setup, whether it is a buy setup or a sell setup, always make sure that you execute your trade from either a base/support zone or a top/resistance zone. The reason this is so important is because if price has previously reacted from that zone in the past, then price would most likely react of that same zone, especially if there has been multiple reactions from that zone in the past. A lot of the times people call this zone to zone trading. Yes, I know, you are asking, how do you still get precise entries from such zones? This is where experience comes into play. After a while of constantly showing up on the charts, observing how price reacts from the different zones, you would then have a good idea of how that particular instrument moves and how to spot when a confirmation candle or pattern is being printed. This will then indicate to you of a potential move. Now listen, I cannot overemphasize this. Nothing beats experience when it comes to trading. You must show up on the charts to understand the charts. Number 2, top-down analysis. As simple as this sounds, this is actually the key, and this would definitely up your trading game. Top-down analysis is simply you analyzing your chart from a higher time frame perspective, like the 4-hour, daily, weekly, or even the monthly chart. What you're trying to do is to determine the overall direction of price at that current moment, and also marking out the key areas that you believe price is most likely to react from. These areas are the zones we talked about. And because this is done on a higher time frame, it is very likely that price would respect those zones. After you have marked out those zones, the next thing you do is to scale down to a lower time frame, where you then begin to look out for multiple rejections from those zones alongside with reversal patterns. This would signify to you that price is most likely to respect that zone and react from there. When you begin to go about your trading in this format, what you tend to do is eliminate early entries, which automatically helps you to avoid being stopped out unnecessarily. This is how you get great entries like a pro.